Hi, YouTube. Hey, welcome in. So you are going to get behind the scenes access to a coaching call with my students tonight. We're going over charting for the S&P 500. Hey, welcome in. So you are going to get behind the scenes. Right. So I hope that you guys can see it. It says that behind the scenes says that comments aren't supported. Let me see if I can allow you all to make comments. Yeah, I think you guys can make comments, but hopefully you're able to see. And we're good to go. Can you guys see me? Okay. Hopefully y'all can see in here. Hi, welcome in. You're gonna get behind the scenes to a coaching call that I'm doing with my students right now. So hope you enjoy. We're gonna be going over the charts for the S&P 500, which is what we're covering. Like that's the stock that one of the stocks we're going to be actually buying and placing our first trade during the challenge. So here we go. Hey, everybody. Welcome, welcome.
Hello.
How y'all doing today?
Wonderful, thank you.
That's good. I'm doing pretty well today too. I traveled back from DC yesterday, and now I am just gearing up for the Take Your First Trade Challenge. So I hope that you guys can all come. It's gonna be pretty amazing. Like, let me show you this picture of what the place is gonna look like.
This man is restless.
Give me a second. Right. Let me share my screen real quick. Okay, can y'all see that? So this is what the place looks like. This is Jamie Kern Lima. She had a big book tour there. And of course, we won't have Oprah. Oh, that would be nice to have Auntie Oprah and Robin is it Robin Williams or Robert? Yeah, Robin Williams. We won't be able to have Roberts, okay. Robin Roberts. We won't have them, but this will be like how epic it'll be. We'll be in like this really cool studio and everybody will be behind us on the Zoom screens. So yeah, that's gonna be awesome. Uh-oh, you'll see my screen there. Turn that off. All right. So, all right, y'all ready to go? Cool. All right, so today's call is all about looking at the S&P from all the different angles, right? Top down. So we're going to look at it from, let's go out to monthly, daily, 15-minute. We'll go all the way down. How many of you all, I'm guessing all of you all have been trading the S&P? How's it been going? Did you guys make some money? Have y'all been making some money? It's at all-time highs now. Not yet. Suzanne, how come you haven't made any money yet?
Because I'm playing around with different strategies that I'm trading SPY in the sim, and I'm playing around with different strategies, clicking buttons and making sure I know what to do before I really dig in.
Okay, sound like you're making it really hard and difficult for yourself. Okay.
Well, and the fact that it's shooting up to all-time highs, that gets me a little nervous because I don't really know what to do then. You want a short, but it ain't going down enough for a good short. So I'm really confused as to how to trade it. So I'm just been doing some of everything.
That makes sense. And then Sharon, I saw you came off of your mic. How you doing?
I'm sorry, is that me?
Uh-huh.
Oh, sorry, Terry. But I've been doing good. I did a personal best in my live, and my portfolio is up about 66% in my live portfolio.
Wait, you said it's up how much? Hold on, I couldn't hear you. Let me mute everybody. Hold on
Yeah,
one second. Everybody mute yourself. There we go. All right, Sharon, will you come off mute one more time? How much is your portfolio up?
okay. Can you hear me now? Yes.
Yes.
I'm up about 66%.
Congratulations.
Thank you. Thank you.
What do you think
I
has been
appreciate you.
working? What has been working best for you?
Well, I only buy calls or puts. I don't do anything else. That's my focus. And that's been working for me.
Nice. Congratulations. And then
Thank you.
I saw in the chat, you're welcome. Miguel, you said that you're in a vertical. How's that going? Miguel, can you hear me? Or you may not be able to talk now, huh? And welcome in, everybody. We're gonna start
I
looking
can
at.
hear you, but I'm driving.
Oh, okay, okay, gotcha. Um, but you said you did a vertical. It's going pretty well. Oh, let's let him focus on driving. All
Yeah, I
right,
do verticals every day.
nice. How's that going?
So far so good.
Okay, okay. Well, good stuff. Congratulations on that too.
Right, thank you.
Welcome. All right, guys, so let's look at the S&P. And as Miss Suzanne said, it's at all-time high, so it's a little scary. Let me get my desktop right quick before I share. All right. All right. You all see this? This is Trading View. All right. So when we're thinking about top down, that means that we're going to go from a higher time frame down to a lower one. And I know you all know this, but just if anybody ends up looking at this recording, then I'm just going to break it down real basic. So I'm going to come over here and go up to the 1 month. So that's going to make each one of these candlesticks 1 month worth of time. And we're going to be looking for formations on this 1 month. Y'all can see I had all those happy faces of where I wanted to get in. Way back when it was 380 something dollars. It has definitely moved from there. Get this so we can all see it. All right. Let me take out some of my happy and sad faces and delete even some of these lines. So back at the beginning of the year, the market was way down here at 380 and it's gone up 200 points for the SPY, but 2,000 points. So immediately we see on a monthly that there's this buyer's level down here from from about 426 and 18 cents. Let me move it a little so we can see exactly. All right, looks like 426. $70. And then on the bottom of that level, 409. And looks like that's also goes with this. Price comes up, stops, and then goes up again. So back here in April, there was something similar. of 2023. Then this looks like it was, we click on it, will it tell us the date? October 23rd. No, October 2nd, 2023. So around October 2nd, that's when this buyer's level was formed. So we would assume that if, well, no, there's another one here. So there's one. Let's go from where, like, current price down. So current price down and to the left. Here's another one. And it's a little harder to see because these monthly candles are slightly bigger, but price comes up, goes sideways a little bit here around 482. So 466 to 482, and then it starts going up again. So if we see a turnaround, we would see price come back down on a monthly. So this would be like if you're swing trading over the year, price would come down to about four on the S&P, it would say like 4,800, right? But price would come down here, hit 4,800, and then there'd be buyers here that would push it back up. Or if there was a really big pull down, it could come back down here to 4,200 on the monthly. But now let's look at what these look like on the weekly. Let's go to weekly next. These are what we saw on the monthly, but let's make this a little bit bigger. I like to be able to really see the difference in the candles. That's why I spread it out so much. So if we were to like use the monthly and then use the weekly to narrow it down, we'd say, okay, well, this actually is probably like this formation. We could narrow it down to just these three candles right here and say price comes up. It went sideways. These three are like basing candles. And then this one actually is not really a big push up. So maybe in this formation, it'd be price comes here, comes down, and then goes back up. It's not like a strong leg out. If we were thinking about our odd enhancers, this wouldn't be like the strongest. Oh my gosh, it just really moved. So this would be something where I'd have to look at this even smaller time frame because it's not the strongest. But potentially what you would do is say, okay, we're going to narrow that buyer's level out to about here because price comes up, bases, and then it starts moving out of that level. But if we were actually to look at, okay, what's closer to the current price than this level down here, we see something going on here on a weekly. Let me make those candles a little bit bigger again because I'm admitting people. Something is going on around here. There was two, these are doji candles where price doesn't really move much in those days. So price was moving and then it kind of went sideways around 512 and then moved up again. Potentially if you were doing like a day trade and the S&P came down into this area, you could do that trade. But to me, that zone's not strong enough. Like I want to see a true leg in, price kind of be still and then leg out, right? Don't see it there. This one, I actually don't like this one either because price comes up, but if I'm telling the story of the candles, this doji, like the tail here comes down about the same length as this candle. So to me, that's not a strong price goes up and then stops. It's like, hey, it was going up and down all day and then went to the next candle. So I'd still come down some more. This one actually would be interesting to me. Price comes up. It kind of plateaus right here around 484 and then starts clearly going up again. So on a weekly, this is interesting to me. What would happen if we start pulling back to 487? And I'll change the color of this. And let's actually make this. Here, we'll make it a dotted line and we'll make the daily a regular line. So there's something going on right about here too. As I said, these candles, these doji candles speak volumes. The fact that price came right around here at 510. And then the next day zoomed out of that another 10 points. That's or next week, zoomed out of this another 10 points. Something is going on there. And you could put both of these candles, actually it would be all three of these. If we were doing a true formation, this would be a basing candle, this and this would be included in that base. Because you need a true leg in. So this couldn't be considered a leg in. So this green candle would be price comes up, the buyers and the sellers are agreeing upon a price, and then buyers start to win out again. So around here at 512, you probably have some orders sitting in the computer that could push price back up. It's like that'd be the story here. But as I said, it's like, when you start doing odd enhancers on it and you start thinking about how long was time in this area, time was here, this is a weekly chart. So time was in this area for about 3 weeks. So that would have been enough time for all those orders to be filled. So I wouldn't be just gun-ho about taking this trade. It probably would be a confirmation entry here, right? Now let's go down to this one on the other hand. If we were scoring this level, well, how long was the price in this area? It was only here for a week. So there might be some orders down here at 487 that didn't get filled. Did the leg out, how fast did it move out? That's a pretty strong leg out compared to this one. Price comes in, stops, and then goes up again. So this one would probably score higher for us. So this would be I'm definitely putting an alert at 487. I'm putting an alert at 512 as well, but I'm not rushing to take this trade versus I'd be probably more open to take this one. And then here, because of the odd enhancers here, like this stayed in this area a long time as well, it'd be a little harder of a stretch to take this trade as well. But because this area was confirmed on both the monthly chart and the weekly chart, it'd be something I would consider, especially if it came down to this red candle. Then I'd be like, okay, something's going on here. Especially, like I said, on the monthly, this looked so amazing. Well, it's just the leg of this, so that's not actually as pretty as I thought it was. But this one looked amazing. Let's go look at this one. We didn't really look at this on a weekly. So let's go to the weekly. Yeah, on even the weekly, this looks pretty. Price came down, stopped going down, and then started going back up again. Just a beautiful formation. And if we narrow it down from the monthly to the weekly using this candle, that's beautiful. So if for whatever reason, price comes down and just keeps going down and it gets down to 419 on the SPY, this would be a level that we'd be like, let me get into that trade. Because it's confirmed on both the monthly chart and the weekly chart. Now let's go look at the daily. Zoom out a little bit. All right, so we saw this area on the monthly, and we saw this area. Ooh, okay, this is looking prettier now. It's like, it's definitely shaping up to a more clear story, right? Price is coming down, stops, and then goes up right here. Price comes down, stops, and then goes up. So these two were confirmed on the monthly, and then we narrowed it down on the weekly. These two gold areas. and we'll continue to narrow down. And then up here, these two were highlighted in the weekly. Now let's see what it looks like on a daily. There's a really pretty formation here. Price comes down, stops going down, and then goes back up. Right here. So I'm narrowing that weekly buyer's level down. So definitely around 510, looks like there's some buyers. And if I zoom in for you a little bit, looks like there's some buyers here, and then there's another candle here. Price had come down and started going up, but this is kind of a big candle. Here, price comes down and then starts going up. All those are just okay. I think this is the one that I like the most, and it's closer to current price. You would get current price down here, and this is nice. Price comes down, stays here for a little bit, and then starts zooming back up. This is a nice buyer's level for a quicker trade, like a daily or a swing. We also see coming down here a little bit, now that we're in the daily, there's a nice gap right here. This would be a pretty trade. This chart is about to get confusing because we're going to start putting in some more lines, but let's go ahead and do it. Let's switch to green. Nope. Do magenta or fuchsia. Is that what that color is? All right, so there's a pretty gap trade right here on the chart. Do you all see that one? Now we have to look at how big that is of a gap to see, does it really make sense? It's only $6. So it's not the hugest gap, but if price does start to fall down, say it has a pretty big fall, and you see it reach around 503, like 504, and it seems like it's going to keep going, like it's a red day, everything is red, things are just falling. You put an alert in your computer for when it gets to, I would put the alert at 505. If it gets to 505, alert me. Then if it starts passing 504, going lower than 504, that'd be a nice put or short to come in and short down to the end of this gap at 497. So right here around, I'd probably get out of the trade around 497 and 50 cents, a little bit before it closes. That would be a nice trade to do that we can just easily see on the daily. And then just coming back up to current price. Someone would say like price comes down and then stops and goes back up here, but y'all know I like stuff that's extra obvious. This is not extra obvious to me. Something's going on right here. You could say that that was an L formation or a Z formation or something. Price comes up, stops, goes up, but I think the nicest is here. Now this 510. Now, Suzanne, you asked, how do you play it if you're at all-time highs? What you do if you're at all-time highs is you go back and you look for the next buyer's level. And then instead of getting it at current price, you do just wait for those down days. So wait for the all red to come back to this buyer's level, and then you could take your trade.
Thank you.
And you're welcome. And I would do this one, I would do it as like a half in type of trade, where instead of doing your whole position, try a little bit. If it works, it works. But if it keeps coming down further, then you can do this trade shorting. So that'd be how I would personally play it.
Thank you very much.
So after you short sell, this is a really pretty, just continuing to look at levels in this 15-minute. This is nice. Price comes down and then goes up again, but it's all based on this level here. Do you all see this like nice doji candle here? Price gaps down, then comes back up. That's a nice, pretty formation that says there's probably some buyers here in this area. And this is always, I always is a hard word, but it's very interesting to look at whole numbers when you're trading the indexes. And this is something that a mentor told me a while back, and I didn't realize that it was such a big deal, but he says when a big bank is trading, oftentimes they'll trade at a whole number. So 500, 400, 510, a thing of five. So here, this is kind of close to that. I was thinking more the 500 range. This is kind of close to 500. So if it comes underneath 500, around 495, that might be a nice place it looks like there were some buyers here. So that might be a nice place to consider getting in, because you're like, you know what? We hit under 500. People are feeling like they're getting a bargain. Now this buyer's level would potentially work. Now let's look back at this weekly buyer's level, because we were trying to narrow it down. I think this is just one of those big candle versus big candle. So the level is probably right in here. Price comes down, immediately stops, and then goes straight back up again. There's buyers here, and it looks like they're originally coming from this level back behind us. So price comes up, stops going up, and then goes up again. Do you all see that? And are y'all still with me? Go down to the reactions. In participants, you should be able to see a place that says reactions. Put a thumbs up if you're still there. You stop sharing for a second so I can see. Okay, good. So y'all are following with me. Okay, good. So let's go back. Okay. Good stuff. So now let's go to 15-minute level time frame. But based on this, I told you what my next plays would be. Instead of buying today, we just closed a quarter. Next week, we're going to be going into the second quarter. People will be readjusting their money and deciding where to put it. So they might sell some of the S&P 500 because it's at all-time highs and they want to take some profit. Remember, you're thinking like a portfolio manager now, not just individual stock. So as a portfolio manager, you've probably been trading all of this past 3 months. You've been watching as the S&P went from 466 and rose up here to 523. You've made some good money. It's been the best quarter. Literally, I saw this on CNBC. It's been the best quarter since 2019. You're taking some profits. So as a portfolio manager, you're going to sell some of the S&P. You're going to take some profits. And when everybody starts selling, there's a potential that this may fall a little bit. When it starts falling, if it falls around 5,100 on the S&P, or for us in this SPY falls to 510, then we're starting to stack back up. Put money in, replay, and we'll swing it again for the long haul. One thing I will tell you is that Goldman Sachs, remember we are playing with the banks, Goldman Sachs had that S&P for the year was going to go to 5,300. We're getting very close to that now. So when the big banks say that their expectation is that it's going to go to 5,300, you can expect a little bit of a pullback when you get close to that. So if it comes to 5,100, it may go back up to 5,300 or 530, but then you may see a pullback again. So just be mindful that we are playing with the investment banks. So we're going in line with them. All right, let's go down to the 15-minute just to see what we see.
You don't do the hour, Terry?
No, I don't trade on the hour. The only thing I trade on is the 15-minute. I know that I think Nina does the hour because she's doing the verticals, but I've never done the hour. Um, hold on.
Terry,
Uh-huh. I'm just
do you
reading.
trade verticals?
I don't as often. I like them, but I don't trade them as often. I
Okay.
love I love the concept of them, but I'm more of a put and call girl.
Okay.
But I will say that right now I do have a vertical going. So it's not that I don't ever do it, but I don't do it as often.
Okay.
Mhm. So here on the 15-minute level, immediately we see that there was something here. This must have been the turnaround today. Price is gonna go in steady, and then there was this nice little jump at the end of the day and then come down. So 524 would be a thing. Coming back to this next day. Now, if we were looking at current price, and then we were saying, okay, where's the next buyer's level on a 15-minute? We'd come down to here, and we'd see 520, this area looks nice. This is pretty as well, but this sideways motion and then this feels like, it's not, it's something. So I'm talking about this right here at 519. This is something I wouldn't pass it up, but it's not the first. I wouldn't put all my eggs in this basket. It'd be like, okay, something's happening right here. Let's see. This one is nice because we can see the reaction that happened after that price. So price moves so quickly out of here that there's probably some orders that did not get filled in this area. Coming down here. This is interesting, but look at like, this is after hours. But I'm like, I just kind of pittered. You don't really have to worry about after hours so much, but there's not a big, I guess it's okay. Hold on, let's see. Let's take after hours off. Now this is pretty. Hold on. So this, I believe, has already been filled and moved away. But if we were just to pay attention to this without looking at after hours, so you see how this closed right around this 520 and then had jumped up to 523 the next day? That would have been a beautiful gap to trade in the first part of the day. That's very pretty. And clearly, you see, just as we assume, it came and just filled that gap and closed right back up. Interesting. Okay. All right. So looking here without the after hour sessions, prices here currently, we come down. This is the next buyer's level that we like at 520. This now we can actually see is another buyer's level here at 519, which is actually very pretty. But it honestly mostly closed here. But this would have been a beautiful gap to trade that first part of the day. This gap took 3 days to close. Price jumped up and then look, it didn't close until here. Well, no, that just took a day. From 21st, no, 25th. Probably the weekend. But that's what I see. Here in this 15-minute, this one can be narrowed. You all see that price comes up, stops, and then goes up again there? Oh, but never mind, we can't narrow it because it's closer to price, this one. So I think that's as far back as we can go on the 15-minute level, close to price. Then I would, from there, I would zoom out to the daily and just go by what the daily says. But there are some other pretty things happening around here. A little further down. This is nice. Let's check out. This was that weekly. This is what we saw on a weekly. In the 15-minute level, price stops here and then jumped up there. And then came back down. I think, or excuse me, is this the weekly or the, yeah, that's the weekly. This is a nice way to just zoom in and see like what's really happening with price in this area. Something is happening nicely here. Price comes down, stops, and goes up. But if I was trading daily, I would start here. Current price, if price comes down to 519, this would be a place to consider. And then potentially down here would be like my second level on the 15-minute. Down here at 515.
So Terry, you're buying calls, right? How many, how long out are you buying them? You're trading on the daily, but you're buying calls.
I still would stick to the strategy of the course. I would do like, if you're, especially right now, because you don't know how long, like what's gonna happen in this all-time highs, I would give myself more time. So I'd give like 2 months out. Or lately for me, I've been doing even further out, giving myself even more time.
Okay, thank you.
If you are doing weeklies, I know that some of you guys have been working with Coach Chris, and I taught him this, and then he taught you all, you're doing some out of the money calls. You can do that if you just have a strong level. So say, for example, it comes into here at 519, and you thought that it was gonna go back to 524. You could potentially do a shorter time frame, so like a weekly out of the money, but it would be a very short call. I mean, it'd be a very short trade. Yeah, but I would say, I'm always a little weary when we're at all-time highs. So if you're going with the momentum, just buy the call, go with the momentum. Otherwise, do a further expiration. I told y'all lately, I've been doing like 6 months, a year out, so that my delta is higher. And I'm still getting a lot of movement every time that the underlying stock moves $1, I'm getting a lot of movement in my options contract. That's what I'm looking for now, more than just how many shares can I get or how many contracts. Do you all want me to do another one? So we've finished the S&P or SPY. Y'all want to go?
Terry, I have a question.
Uh-huh.
How often do you do your top-down analysis? Do you do it? Is that because I mean we're taking time to do this? Is this like a weekend thing, or do you do it every day, or?
I do it every time I take a trade. So if I'm about to buy, so today I looked at Adobe. If I'm about to buy Adobe, then I'm gonna actually go and look at a month out, week out, daily, then I'll actually place the trade. And it gets quicker, but you're just kind of trying to see like, am I buying? Does this make sense on a bigger time frame and a smaller time frame? Does it still make sense?
Okay.
Quick question, Terry.
Mhm.
Just to confirm, you said when you do your top-down analysis, even though you're charting on, you're making your buying decision on the 15-minute, and then you go minimum 60 days out, but your purchase decision is based on the 15-minute calendar,
Mm-hmm.
15-minute
Well,
chart?
yep, like I'll usually look at daily first, and if I see the formation on the daily, then I'll go to the 15-minute and check and see if this is the right trade to do. And I'll base where I'm getting in on the 15.
Do you ever make a purchase decision or based on premium chart?
Like you mean, because the premium is low right here, then I'm gonna buy it, and I'm gonna
No,
just hope that the premium goes up?
like when you go on the options chart, it gives you the opportunity to see where how the premium chart is. It's very similar to the.
Oh, no, I don't. Yet, when that does come into play for me is when I'm exiting the trade. So for example, I make the buying decision based on the chart of the stock itself. But I make the exit decision based on the chart, where the seller's level is. But then also, sometimes I'll look at the chart of the options contract itself to see, does this make sense for the option contract? How much should it be when I exit this? The last time that it was at this price, how much did the option cost? The reason why I don't make the decisions on the options chart as often is just because that also has to do with time value. So as the theta is changing, the price of that premium's changing too. So it's a little harder to calculate versus the chart of the stock.
Thank you.
Randy says, can you explain your entries to reversals, price coming to your new level and turning around? Randy, usually I'll exit the trade where I want to exit. And then by the time or wherever I feel like I'm going to switch my trade, I just make a new one. So for a reversal, I actually don't press the reversal button on the computer, but it's my phone. So on the phone, usually I'll exit, take profit or loss, and then re-enter, like reevaluate it and re-enter the trade. Which one do you all want me to do next? Yes, Angel, like anytime I take a trade, I'm looking at several time frames. Okay, so Lakia says, let's review Apple. Okay. All right, so let's go new. I was about to change this one, but I think, oh, there we go. I'm like, that would change. So you all know I bought 500 contracts of this one recently, and then I want to buy 500 more. Today, I think would have been the day to do that. Because it's the last day of the quarter. Like I was saying, people are going to start, we're portfolio managers now, right? So portfolio manager is now going to evaluate what healthy companies have been underperforming the other companies. NVIDIA, all those Meta, everything is running up, but Apple has actually pulled back. So this would be one that for next quarter, they'll say, hey, well, there's some room here. Let's move money here. All of a sudden you'll start seeing this company rise and dang, I missed it, right? All right, so let's first go to the daily. So I'll show you guys the actual method that I use now. Instead of us going first to monthly, I'll do daily first, and then I'll look at a couple different time frames. And let me delete this. I'm so excited about this one. Because Apple is a good company, right? So then when you see that it has like this weakness, you're like, oh, this is a great time to buy. So on a daily chart, like look at this, like price. For me, my eyes immediately go to levels that are just easy to spot. So there's definitely this beautiful level here that we're approaching. And this one happened way back in October of last year. So price was coming down around 168. It stopped going down and then started going up again. Right now, it came up, went almost to $200, and then over the next little while has been going down, up and down, but the diagonal would say, the trend line would just say it's been going down. It did have a little bit of reaction to this buyer's level right back here on March 7th. So price came down and you see this beautiful, let's zoom in. All right. So you see this beautiful doji candle right here. Price came down, stopped going down, started going back up again right before this level. Right here. And we'll change the colors. It's kind of hard to see, but right here around 169. There we go. So from current price, if you're coming down, there's a level right here, but then there's this buyer's level right here that actually happens a little bit ahead of that bigger buyer's level that we saw. But just beautiful, like just beautiful. So this wood from back here, way from last year, these are starting to react to it. Which is what, like, that's why we do this. It's like doing what it's supposed to do. Price had come down, started reacting to these buyers, went back up, lost some steam because there were some sellers here. Price came down, stopped going down, and then had this big gap down. So there were some sellers here. At 179. There. 179 to 180. There was some sellers back in March. Large gap down. And you can always go back to the news or to different things and kind of see what happened on that date. What made it go down? Did a lawsuit happen, or did they find out that the sales of the Apple weren't as big? I know they're dealing with China right now. Maybe this was the day that China reported they weren't buying as many iPhones. You can go back, and usually these moves will correlate. But for us, we don't really care what the news said. We just want to look at the chart. So there was a lot of sellers right here and price came down. We started buying because there were a lot of buying orders back here from October that didn't get filled. So it hit here, those orders started to fill, press back up around this area of sellers. They started to sell again. They were like, oh, we're about to get our money back. We're almost even. Sell, sell, sell. Started selling, huge candle down. Now they're coming back to the area of buyers. Now this is where we want to be a buyer. If for whatever reason next Monday, remember portfolio managers are doing their thing, they're moving stuff around. We may have a red day in the NASDAQ. Then and it does come down to like 168, 169. Nice place to be a buyer. It may not come back to here though. You can see that there's already price came down. There's another buyer's level here. So anywhere in this area around this 170, I think we're in a nice level to buy. Expectation would be that it would come up, and now this is the new seller's level. Price comes up, stock's going up, goes back down. There's some sellers around here. But now we need to go look at a 15-minute level chart to see, like, let's narrow down this big candle. Where are the sellers? So let's go to 15.
Terry, before you go to the sellers, can I ask you a question?
Mm-hmm.
This is the point where I kind of trip up, because the level that you said you want to be a buyer is around the 168, I believe you said. But that level back on that from a year ago, that's lower, 165-ish in within that area. So that's where I kind of pause and say, well, I don't know if it's going to go lower, even lower. Are you always going to just take the first buyer's level and not consider that it could break through and go deeper?
Yes, because if you don't take the first one, then you may miss it. And that's why we would do the odd enhancers here and say, how strong is this level? Today, like from current price down, this is the closest one. So we would then say, how long was it here? How fast did this candle leave? And do kind of the analysis. The trend on Apple has been going down. So the way that maybe I protect myself is either I buy half of my position, and then I wait to see what happens and then try to buy the other half, or I just put my stop in knowing that potentially it can go down a little bit. Maybe it'll go down to this level or this level. But I'm okay because I'm in the trade and I know eventually it'll come back up here to 179, 180.
Thank you. That's helpful to me. Thank you.
Some/a lot of trading is getting comfortable with being uncomfortable, but then also getting comfortable with what is my potential upside versus my full risk. So on this one, the risk is that this will come down to 165 before it turns back around. If I get in at 170, that gives me about $5. And then if my stop is a little further down, maybe $6 of potential risk. Versus if I'm doing this in a shorter trade, my potential upside from 170 to 180-ish is $10. So now you just have to figure out in your own mind, that's about a 1-to-1 reward to risk ratio. Am I okay with taking that trade? Or am I, is that too risky for me? For me, actually, because now I've been doing more swing trades, I would be assuming that Apple eventually is going to make its way back up. Like this is a seller's level. It's going to come down, from here, this is a seller's level. This is also a seller's level. It'll come down at 184. It'll start coming down at 190. It'll come down at 195. Like it's not going to be a straight line up, but eventually my assumption is that this Apple stock will eventually get back up here to 198. So if I'm more of a swing trader and I'm going to let this sit for 3 months, 6 months, 8 months, eventually I would assume that this has the potential to come back up here to 200. So that means I have $30 of upside with potentially about $5 to $6 of risk. I'm okay with taking that bet because I'm letting it sit a little longer. So that's where you'll also just have to look at what is your true reward to risk versus, and that's going to be different for each person. If you're a shorter time frame, well, this is probably the closest seller's level that you're going to get to maybe in a couple months. Potentially a couple weeks, you never know. Does that help? Does that kind of give a little clarity?
Yeah, that was perfect for me. Thank you.
You're welcome. And do know that it's okay to get in a little bit before a big buyer's level. Because just like here, price came and it almost hit the level, but then it came and turned back around. So if it's a healthy stock, it's a pretty, you can see it, buyer's level. It's okay to get in a little bit before the level and just know that the first day or two, it may go negative a little bit as it's making its way down actually into the buyer's level. But then you could take the trade. So that's on a daily, but now let's look at a 15-minute level. So this is if I'm doing a more active trade. So I'm only going to be into this trade a day to a week. Now let's look at what we would do. Current price, we come down. There's a buyer's level right here. Still same area as the daily, which is good. I like to know that my areas are confirmed by the daily and the 15. That's like a icing on the cake. So if it comes down to here at 170, probably getting into the trade, and then let's see where we're selling. There's something here at 173. Ooh, look at that. What is this? Oh, beautiful. Okay. So we go back a little further, looking at sellers levels, and we see this. Look at this, price comes down, goes sideways, goes down again. It can come up to 177. Here, I know you guys are getting confused on all my lines. Look how pretty that is, that beautiful 177. So that might be beautiful as well. So what I would do on a shorter time frame is, say for me, like, okay, I get, sometimes it's like, do you teach to the general for everybody, or I tell you what I personally would do on this trade? So if I personally was taking this trade, one, I have to admit, Apple on a short time frame never tends to really work well for me. So I often try not to trade Apple on a short time frame because it just, I don't know, for whatever reason, Apple and Tesla on a daily are they're not my jam. Adobe, totally my jam. I don't know what it is. But if I was doing this trade on a slower time frame, I did this one on a longer one. I said options calls for January of 2025, right? Give it some time. And the delta is like, it's like 68%, it's 0.68. So every time Apple moves a dollar, my options contract is gonna go up 68 cents. We're good with that. We don't have to watch it. We just let it run because we know eventually it's gonna go back to all-time highs. We don't know when, prayerfully sometime this year, but let it do its thing, right? On a daily though. So the way that I would play this is potentially, some of you guys are doing verticals. Potentially I would do it as a vertical and I would sell puts. And I would sell puts on this because I know that it's a healthy company. So I don't mind owning it. Even if I get assigned, assign it to me. Oh, you want to assign it to me down here at 165? Beautiful. You're going to pay me to actually get some options contracts. That's selling puts, right? Wonderful. So you could do that down here. You'd probably be selling right around where your stop would be, which is somewhere around here at 169. And then as it went up, you could get out of the sell, like if you're selling puts, you could get out of the trade as soon as those went negative. Just get out of it. You don't have to wait till they expire, or as soon as they make some money and start going back up, you're good. So selling puts would be nice. I could buy a call here. Particularly for me, I'm more of a buy call girl. So I would buy calls probably, tell you, like I'm saying, Apple's been funny lately. And then they have all the stuff going on with the being sued by the United States and China not buying as much, all the things. So we just don't know how long it's going to take. Otherwise, I would have said, I would have just bought a weekly contract and then bought calls probably around 169 and then let it run up. Or I would have done out of the money calls up here, where were they like super cheap, but about 20%, 20 cents for delta. And then knowing that I'm going to eventually see it come up to 177. But like I said, the ones that are out of the money, they would probably be like the least risk because you're not putting as much money into it. But also it'd be tougher though, because you just don't know how long. Like you see this stayed here in this range for about, let's see, let's count. 1, 2, 3, 4, 5, 6 days. If you had a weekly contract, it would have expired waiting for it to pop back up to 177. So honestly, guys, I'd stay safe. Just do 2 months out, give yourself some time, and know that you're trying to buy it. Whenever it goes to 170, you could either do in the money, or for us, we do at the stop. So the stop would be down here around 168. And then 2 months, give it some time. Your goal would be for it to get to 177. If you were doing a bigger swing trade and had more time, then you would do what we just said, and you would buy it and then give it time to get back to, it can go all the way up to 180 up here. You could sell some at this level, 183, sell a little bit more at 189. If you have stock, this would be a great place to just buy shares. And then as they move up, then move your stop, manually just move it up, or do a trailing stop and let it go and just run. But I would take some profit when you get to some sellers levels. Take some profit, enjoy your life. All right, let's look at a couple more. Okay, good. Y'all are with me. Any questions on this one before I leave?
Hi,
I have a
Terry.
question,
Okay,
and I don't know if it's just related to this.
okay,
It has to do with taking direction. You know, we are charting top down, monthly, weekly, daily 15-minute, and we're looking to buy with a 60-day, well, I guess minimum 60-day outlook. So what I'm struggling with is directionality. You know, I changed the candles to the lines,
okay.
and I'm on the monthly, it might be pointing bullish. Sometimes on the weekly, it's contradicting that, and on the daily and the hourly, it does like a mishmash of both. And I'm saying if I'm going to be in for 60 days, ordinarily I would be looking at the monthly and saying, okay, which way is it pointing on the high time frame? I don't know if that's correct, because I took a couple of trades and that didn't work out in my favor.
Yeah, I'd say if you're only in it for 2 months, you're still looking at the daily and weekly. Because at 2 months, that's not enough time for it to act on the monthly. The monthly, you would need like 8 months, a year for it to actually move to the levels of the monthly.
I see.
For 2 months, it can move to the levels of the weekly and the daily.
Okay. Yeah, that should help out.
Tell me a stock that you've been looking at so we can look at it together.
IWM.
IWM, so
Yeah.
the Russell.
Mhm.
All right. The Russell's been interesting because oftentimes indexes trade together, but then sometimes the Russell does its own thing. All right, so let's look at it first. We're looking here at the daily. Let's look at it first on the daily. So, and well, actually, no, let's zoom out, see if it's at all-time highs first. So let me look at the weekly. Nope, it is not at all-time highs. Wow. So this is why you have to kind of look to see like, where is it? The S&P is at all-time highs, but the Russell is not. Russell's actually in a seller's level on the weekly. See how you go from current price, then go over? There's this really pretty seller's level on the weekly. Price comes up, stops, and then goes down. These two would be your basing. So it's currently in a seller's level. Right above this is another seller's level on the Russell. This doji candle here, so price comes down, stops, and then goes down again. Right when I started seeing that this was in the seller's level, I would either alert myself and be ready for it to fall, or I would go trade something else. And the reason why I would trade something else is because everything else has been on a bull market except for this. It's been sitting, and it's kind of going up, but it's been, it's not moving like everything else is moving. So I'd go find something else that was moving better. But we'll keep going. So we said that this was a seller's level from back here in March of 2022. Then we had this seller's level from January of 2022. Then we have this seller's level here. It's got a whole bunch of seller's levels coming up. This seller's level, 222 to 226. And then it's got another big one that's more noticeable up here. Because I saw all of that on the weekly, I wouldn't necessarily have to go to the monthly. Because the thing you're looking for is just like, where are we at? Where is current price in relation to where price has been for this stock? But let's go to the monthly just because that's what we're doing right now. On the monthly, there's something here, price comes down, stops, and then goes down again. So there's some sellers more prominently from 222 to 226. And there's still these sellers here. Price came down, went sideways, and then went down again. So the Russell is interesting. So that's the 1 month. Let's go back to the 1 week. So there's sellers right here and then sellers here. Now that we narrowed that down a little bit. We're not including this one when we took out that one level from the monthly, but this would be another thing I'd be paying attention to. You're about to come onto a pretty strong doji here, about 215 on the Russell. So this would be, I'd be selling this. Price comes up, I'd be selling because you're in a sellers and then you're about to hit this sellers. So I'd be taking my profit and moving on for a minute here. Now, could I be wrong? Of course I can. Price could come through this, push here, might go a little sideways, push through this one, get to this one, but it's got a lot, like there's just so many barriers. All right, so let's now go to daily. See what it says. Because you know from looking at the other ones that we're about to go into the seller's level, it's going to be really important that you go way far back when you're looking at the daily and the 15-minute. So yep, there's some sellers here from the daily. And then there's some sellers here too. Price comes down, stops, and then goes down again. Let's make that a little bigger, easier to see. And the reason I came all the way back there is just because you're going from current price and you're looking for those sellers. So you got to go over, but then you're going up and to the left, right? So nothing, 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 but we know they're there and then we find them way back here in March, April. So they're here. Current price is right at 210. So you still got a little bit to go before the sell. And then this seller's level here as well. So they're coming. Sellers, but these are sellers too. Price comes up, stops, and then you can see it kind of, it's from this buyer, this seller's level, but price comes up, stops, and then goes down again. So if I was looking at the Russell and I was currently in it, what would I do? These are sellers. This is a seller. Are you in it now or you were going to get into it?
Unfortunately, I'm in it, and it broke through a bunch of sellers levels.
Okay.
I have like 50 days left in it though.
Okay. And do you have calls or puts? What do you have?
I did puts.
Okay.
Yeah.
But you said it's
So
been breaking through.
yeah, so I'm right at the moment quite a bit of trouble, but I got 50 days.
Okay. Um, hmm. It's always so tough when it's not doing what you wanted to do fast enough. It seems like, right? It seems like you're positioned correctly, but the problem is you're positioned against the momentum of the other indexes. The S&P and the Dow, they're at all-time highs. So if you were trying to go with the direction of the other indexes, you'd be buying calls right now. But the Russell is showing puts. So I think that's what you're fighting against. It's not that you did the wrong trade, you're just fighting against the momentum of the overall market. Um, I'm thinking about things that you could do. But you said you have 50 more days.
Yes.
You could sell calls against it. That would bring in some money while you're waiting for it to fall. You could even buy calls on a short term, like each day, if it keeps passing through these sellers level, then you buy some calls and sell them quickly just to bring in some extra money while you're waiting on this bigger one to do what you want it to do.
Yeah, I did that today, but I did that in my sim. I'm looking at the chart and I have no confidence that I know what I'm doing right now. So I figured, let me just sit on the sideline. But in my sim, I did buy calls. Um, but
And how did they do?
I think the issue for me, I think you answered it because I was equating a monthly chart to like a 22-day trading cycle. I guess I should have been looking on the weekly and the daily instead.
Yeah. In 2 months, that gives it time to reach the levels on a daily time chart, like on a daily chart. Because in 2 months, that gives enough days for the levels to be filled. If you're looking at a monthly chart, each one of those candles happened over the time frame of a month. So you're just giving yourself like 2 more candles to reach wherever you're trying to reach. Does that make sense, or do I need to say that again?
No, I got you. It's clear. I mean, as soon as um, I guess I didn't have the context of time. That's really what the issue was for me. So, but yeah. And like I said, I know I'm in trouble, but I got 50 days to figure something out.
And Uchenna, I would say if you're in trouble on this one, to cut the losses short, like hey, in 10 days, this is what it did, and I lost. It might hurt, but maybe you cut it here and then have enough money to do a different trade versus trying to let this play out and the loss get bigger and bigger. So also keep that in mind too.
Yeah. Well, let's see what April has to say next week.
All right.
Yeah,
I
but
will.
yeah, I got you. I won't go past next Friday. I know that.
Good. And also be willing to, like, I think, was it you that put in, when do you reverse? Somebody
No,
else put in, when do you reverse?
no.
Be willing to acknowledge, like, I did the right thing, but the timing was just off.
Mhm.
And be okay with saying, like, hey, I got hit this time because the timing was off. I'm gonna get out of this before I let it go much further and try
Mhm.
again, try something different. Because if next week the S&P and all the other indexes are going up, it's gonna be very hard for that put to work on the Russell.
Mhm.
Because you're going against the momentum of the market. But
Mhm.
if those start falling and yours starts going even a little bit better, take your profit and get out before
Yeah,
it turns back around.
I got you.
Yeah.
Thank you.
Mm-hmm. Any other questions before I switch from this one? Let me look and see though when the buyers, like what's gonna happen. So if your put works, what will happen next? If your put works, then there's some buyers. What are we on the daily? There's some buyers right here at 206. Change this. There's some buyers, this is 205. There's some buyers right here at 205. So it's only gonna come down about $5. How much does the Russell, I don't trade the Russell very often. How much does it usually move in a day? What's the average true range?
Today it was like less than $1. That's strange. Normally it's about $3, $2 to $3.
Okay.
Mm.
And tell me where your strike is.
Oh boy. Let me pull that up. I'm much lower than I am at. Took it at 204,
Okay,
203, 203.
you're right in here. Uchenna, you bought a put right in the buyer's level, huh?
So when I first charted it, it was a sell zone. And then I think the day of or the day after it turned.
Okay.
So
It was about 10 days ago?
mhm.
Okay, so maybe charted it selling here. Because there's some buyers here. I'm trying to see like when your put works, where will it go? So it'll turn back around. It'll probably stop around 205 because there's some buyers that'll make it want to turn around. And if it keeps coming down again, it would stop maybe at 203.
The way I'm looking at, if it gets to 205, that'll reduce my losses, and I'm willing to get out at that point. That was the plan going into next week.
Okay.
Yeah.
And
So
if it goes up, where are you going to get out?
if it goes higher than 211, I'm out of there.
Okay.
Yeah.
Okay.
Yeah.
I think this was, like you said, like we said before, you did the right thing. When you were looking at the charts, I saw nothing but sell levels too. I think it's just the timing because the S&P and the other indexes keep going up. So you're fighting against the overall market.
Right.
Mm-hmm. And then you're right, you have 2 more months. So you do have some time for it to act right and start coming down. I know where you're at though. I have a couple trades like this too, where I was shorting, I started shorting the S&P at 5,000 and then it's up at 5,200. And I was like, oh no, like when is it gonna turn around? So I understand where you're at. But I do think, and this is for everybody, if it doesn't turn back around and you have one that's losing, like, and here I'll stop sharing for a second. It is important to start figuring out, where am I getting out of this? And just accept, like, okay, this is the amount that the loss will be, but I need to cut my losses, regroup. The put may still be the right, excuse me. Excuse me, goodness. Man, but the put might be the right trade, but it's just not the right time. So it'd be one that I'd still have in my alerts, one that I'd still want to take at a different point, but because of time value in an options contract, and you're gonna be losing money as you wait on time, you may have to take it out, regroup, and then re-put the trade in when you see the momentum going in the direction you want. Yeah. I see a couple other questions. Apple and Adobe. Okay. Excuse me. Okay.
Hi, Terry.
Hi.
That was me in the chat. I think Mariah helped me with the question, but I took that Apple, I bought a long call last week and it was in the positive until the news came, then it went negative. So I just wanted to make sure I'm understanding correctly. I did two. I took 10 contracts at 170 and I took 10 contracts at 165. It started dropping below 170. So as long as I still have time in that contract, I'm still good, even though it drops below 170.
For me, I think for me, if it were, and all this is educational purposes, as you all know, but disclaimers, educational purposes only. But for me, the chart says that you still have buyers in that area. So until it goes below about 165, I think that's when the chart said there's no more buyers. I think you're still okay. But you definitely do want to give it time, because we just don't know how long it'll take for Apple to turn back around.
Yeah, I'm trying to trade like you now. So I bought 2 months out. And then with the Adobe Gap that we were studying last week, it did great, and it hasn't even moved that much. And so I put a sell order in because I was so excited that it went positive. But it only took me out of 5 contracts. So the 5 that's still remaining, it's been in there for like 2 days. And I'm like, I've never encountered that before. It's just sitting there. And now the 5 contracts that I have is going negative. So I'm like, what do you do with that? Do we just hold it and just wait till it turn around and start filling the gap up?
And that one, how much time do you have on that one for Adobe?
I think I did 2 months, or I did 1 month. I think I did that one for April.
Adobe, its average true range is about, I think it's about $16. Let me double check. But let's look at the average true range of Adobe real quick. Adobe is one that, yes, it may have some down days, because I noticed that too, but then it'll turn fast. So, man, goodness.
I did these in the simulator, so that's why I'm holding them, because usually when I see red, I'm like, oh, let me get out the trade. But you're really helping me understand that you have to look at the zone and and determine, okay, it's still buyers here, so hold it because it'll turn around versus when you should just jump out of a losing trade. And that's what I'm learning.
Yes, and gaps are swing trades. They're gonna go up and down and on their way to fill this gap. So yeah, you're still okay here. It might feel a little uncomfortable, but you're still okay. I may, if I were you, give myself a little more time because we don't know how long it'll take to go fill that up, but yeah, like it's the chart is still working. The gap is still in place and it's still working, so I think you got time.
Okay, thank you. I don't know why before I had in my mind, oh, it hit your strike price, you're done. You know what I mean? I was thinking that way, like even in the middle of the trade, I had more time. I was thinking, oh, the trade is over.
Options are interesting because, you know, they lose value so quickly. But I would think it hits your stop, then you're done.
Not
Make
my
sure-
stop. I meant strike. I meant my strike, not stop. That's why I was getting confused.
Right, that's what I'm saying. You
Oh,
said it hit my strike, now I'm done.
yeah.
I'm saying if it hits your stop, like where your stop loss would have been, then
Mhm.
you're.
Thank you. Okay.
Mhm. So if it starts coming down into this area of like below 485, you're done. No matter how much time is left on the contract, this is your stop, get out of the trade. But if it's still in this area and still working its way up towards where you want it to be, you can give it more time. But like I said, on that one though, the next time that Adobe one goes positive, take some profit and then do a further one out.
Okay.
Because it may take more than 1 month to do what it needs to do.
Thank you so much. Got it.
All right, guys. Hopefully this was helpful tonight. Was it helpful? Give me some reactions or chats. Did y'all learn something?
Yes, it was helpful. Thank you.
Good, you're welcome. Okay, good.
Terry,
Yes,
it was
ma'am.
helpful. I just want to have one last question. Is it possible for the training that you did the last time with us for us? Is it possible? I know you said you had your personal information was on there, so you didn't want to, um, you know, put it up for us to see again. But is it possible for that to be edited out so that we can see that particular training?
Yes, we've been really busy in the middle of the Take Your First Trade challenge, like getting ready for that. But Zephyr on our team, he's gonna edit the video and then put it up. But just give us some time because he's been doing like all the videos for
Oh,
the
okay, that's
challenge that's
perfect.
coming up.
That'd be fine. Thank you.
You're welcome. Even this one too, I'm like, oh shoot, my email account was out. I need to edit that out, but it should be fine. You're welcome. All right, guys. Well, thank y'all so much for your time today. I'm glad to see you. I think the biggest takeaway that I have or hope that y'all got from this one is cutting your losses short. So Uchenna, you did the right, in my mind, I think I would have done a similar trade looking at the charts, but it's not going your way. So acknowledge that. It hurts, but you might have to take that loss and then be able to fight another day than letting it sit for 60 days. What you could also do too in that situation is take a little bit off the table. So maybe sell some of it. And then if it does turn around in 60 days and starts going positive, then you'll net even.
I
So
got you.
that'd be
Thanks.
another way to.
you.
Yeah. But yeah, that hurts my feelings too. I told you, I definitely had that one shorting the S&P at 5,000. I was like, oh, it's getting all-time highs. It's time to short it. It did not come down. It went steady running up. And so I understand your pain on that one. But sometimes we take a loss and just have to regroup and go around again. Yeah. Also, don't be afraid to do that. The trade that's against your trade in your real account. So next time, if you see that the Russell is running up higher, it's okay to do that call in your real account against your other trade to try to get some of your money back while you're waiting on that one to turn around. Yeah. I know you know all that, but sometimes it's nice to hear somebody say it. All right, talk to y'all later.